Okay, welcome everybody. We're showing 42 plus participants in our webinar this evening. As you know, could you go to the next slide, Janae, please? Today we're going to talk about the PPP loan program and the forgiveness process. For those of you that already have a loan, this one's going to be very, very informative. If you don't have a loan, it'll be informative also, but it may also give you some ideas on what you may want to do since the program has been extended. But briefly, what I'd like to start out our meeting today talking just a little bit about SCORE. For those of you that may be new to SCORE, or for whatever reason you may not know too much about us, we're a national organization, nonprofit organization. We're a branch of the Small Business Administration out of Washington, D.C., and we provide free confidential business mentoring in person and online. And our business education tools include things such as local workshops. The group of people that will be presenting today, myself and others, we typically hold this kind of information on a person-by-person workshop, but due to the COVID crisis, we're doing it now on the webinar through Zoom. So this is considered what we would typically have done in a workshop environment at Manatee Technical College, but circumstances as they are, we're doing this webinar. We have 300 plus chapters, roughly 11,000 volunteers nationally. We serve over 1,500 communities, and since 1964, SCORE has served over 10 million clients. Next slide, please, Janae. SCORE is an organization that helps you through the life of your business, all the way from your pre-startup stage, through all the different phases, as you can see on the slide, all the way through your startup phase, your opening, helping you through the growth of your business, and even to the point of assisting you and giving you some consultation in the event that you'd like to exit your business. You can request a SCORE mentor to assist you at any stage in your business life. If you're in any of these particular different stages, you're free to log into our minnesotascore.org website and request a mentor. And you may find that the mentors may be able to provide you with some advice or some guidance that may help you, regardless of which one of these stages you're in. If you decide that you want to have that mentor through the entire period of your business life, if that mentor is available or other mentors, you're always welcome to use SCORE. Next slide, please. This is a indication of some of the community sponsors that we have here in Manatee County, sponsors and partners. As you can see, Manatee Technical College is on there. That's the location that we typically hold our workshops. You can see we're part of the SBA U.S. Small Business Administration out of Washington, D.C. And the other organizations on there are typically some local community banks that that from time to time participate and provide us different types of information for some of our workshops and educational programs. And then you can see we have various and sundry different partners. Once again, we're a nonprofit organization, and on a local basis, we rely on any kind of local donations from some of these partners and sponsors for just minor expenses for printing and materials, some office materials, some very minor expenses that we experience. Next slide. This is just a quick brief summary of the speakers today. You can see myself on the left-hand side. I won't spend a lot of time going over myself, but we're fortunate today to have Jerry Detweiler with us, who is Education Director for NAV, which is an organization that provides, assists small businesses in linking up with different types of funding organizations, banks, and different funding organizations. Jerry will be joining us in a few minutes a little later on to tell us a little bit about some of the PPP programs. And then Barry Portugal will be our main presenter today, who has done a really great job investigating and keeping up to date on all of the changes to the CARES Act and the PPP and EIDL loans. And I think you're going to find all of these presenters very, very helpful today. Next slide. A brief disclaimer here. For those of you that are familiar with the CARES Act and the PPP loans, which I'm sure most of you are, it's a work in process type of support from our federal government and the SBA, and it's changing constantly. So the material that we present today is the latest approved. We'll talk about some of that, approved by Congress and signed into law by our president, and is currently effective as we understand it. We don't claim that we have all of the data and everything that you may need. So we'll be providing you links of different information that are provided by the SBA and the Treasury Department that you can go to verify and or look for additional information that we may not have. But the purpose of this webinar is to provide you not only the information as we understand it, but guidance on where to go to get answers to your questions in the event that we cannot provide them. So, but we do encourage you to go to your lawyers, accountants, and financial advisors in the event that you're looking for anything that you can't find on your own. Next slide. So today, we're going to be talking about the Ppp Flexibility Act, which is what it was named on July 4th when it was signed into law. And what we're going to try to provide with you is some navigating ideas on how to work your way through the PP loan for forgiveness. If you have a loan out there, you know that the documentation portion of your PPP loan is very, very important. And there is now processes in place that is required as a part of the PPP loan program for you to provide documented information to the SBA and the federal government to ensure that your loan is forgiven. And that's the main reason that we're talking about it today, but we'll be providing some other ancillary other information which relates to the CARES Act and the PP loans, but the core is going to be about loan forgiveness. Next slide. So here's a brief bullet points on the agenda. I'm going to cover very quickly the status of the Main Street Lending Program, the Emergency Disaster Loan Program, the reopening of that, and then we'll be getting into the core for the status of the PPP loan program, and then the Flexibility Act, and those will be presented by Jerry and by Barry. And then we'll have a question and answer period at the end. Please feel free to type in your questions into the Q&A section at the bottom of your Zoom screen. Many of you submitted questions beforehand. We will address the pre-webinar provided questions first. Then we will go through the ones that are typed into the Q&A box here on the Zoom program and then conclude at the end once we've completed all the questions. So briefly, let's talk about the Main Street Lending Program now. The Main Street Lending Program, as you may be aware if you've been watching the news, is aimed at mid-sized business companies. Typically, what's really strange about this is that it has still not been officially signed into law and has been approved as part of the CARES Act, but continues to be work in process. But it's important that everybody understand that at some point this may become available to our small business clients at SCORE. You can see by these bullet points, there's a lot of details. In this particular case, this Main Street Lending Program is that you must be a for-profit organization and established before March 13th of 2020. You must meet one, if not, but not both, requirements that the business has up to 10,000 employees. So they've lowered that from 10,000, from 15,000 down to 10,000 employees, and you must have you can have up to $2.5 billion in revenue. So they've lowered the size of the businesses that this program will be available to. So if you've noticed, if you watch the news, the goal is to keep small businesses in business. While they've lowered the requirements the availability of this loan program for smaller businesses all the way down to $2.5 billion from $5.5 billion in revenue, it's still not considered really small businesses, but it is available for smaller businesses. I go through some of these other details. You'll see that you must have a minimum of $250,000 in EBITDA. That's earnings before interest and taxes, and no debt. And as you can see, 250,000 is and less than 500 employees. You're still a reasonably sized business. You must be in good financial standing before the COVID crisis, and you may also participate in the PPP loan program. So even though you do participate in the PPP program, if you meet the requirements for this, when this does become available, you may want to consider it. There's 3 types of lending, different loans that will be in this program. You can see those mentioned at the bottom of the slide. These are not forgivable loans. The rates vary from 2.5% to 4%. They're repaid over 4 years versus 2 years for the PPP program. So your payments can be stretched out longer. And there's a small fee when they're initiated. And these will be initiated through the Federal Reserve Bank of Boston rather than the SBA or Washington, D.C. So there's some different nuances to this. Keep your eye on the news if you're interested in this, but you need to know that it's still being considered by Congress and may get approved at some point in time. Next slide. Briefly, for the EIDL program, the advanced portion of the EIDL program that was forgiven has been discontinued as of July 11th. If you received an EIDL loan advance prior to July 11th, that advance is good, as the rules stated at that time, will continue to be subtracted from the forgivable amount of your PPP loan. So if you are one of those businesses that participated in both the EIDL program and the PPP program, be aware that advance, I think it was up to $10,000, will be deducted from your PPP forgivable amount. But going forward, that if you apply for an EIDL loan, there will not be the advance grant portion of that program, which has been discontinued. The reason it was discontinued is by law, they exhausted all of the money that was allocated by Congress for that particular portion of the advance grant portion of the EIDL program, and it's exhausted and it has not been refreshed. But keep an eye on the news. It could be refreshed, it may not. Once again, as we said earlier in this, the program guidelines change, but at this point, it is not available. Some of the brief things about the EIDL program, you can see that there's a $2 million, the $2 million limit that was on this EIDL program has been reduced. The EIDL loan amount is now no more than $150,000. As I mentioned, the federal government, the Congress is trying to move these programs to target smaller businesses because it is, as they work through this, they're realizing that the smaller businesses of our country are the ones that need the most help. So the EIDL program, the funds that are still available will be in smaller loan amounts down to $150,000, which means that the larger businesses that could have taken up to $2 million will not be applying for this. So this will help target these monies back into the hands of the smaller businesses, which is typically the clients that we have at SCORE. The loan portion of the EIDL program continues to have funds available, and it's under very affordable terms. They're including a 3.75% interest rate for small businesses, 2.75 for nonprofits with a 30-year maturity. So you can get, if you do the math a little bit, $150,000 loan at 3.75% for a 30-year term is a very, very low payment, and it's a good source of funds. This could be a good source of funds if your business is affected by COVID, which is one of the requirements, and you want to get some very inexpensive money for a long term. This is something you may want to consider, and you can participate in the PPP program at the same time. So don't forget that this is out there. The link is at the bottom of the page where you can apply. Once again, these, I did not mention, these slides will be available. They'll be posted on the Minnesota SCORE website. So you'll be able, with these links that are live, that you'll be able to go to as reference and click on them and get additional information, in this particular case on the idle loan. So slides will be available following the webinar. Next slide. As we mentioned, the reason we're here today, the PPP loan program has been extended until August the 8th. If you've been listening to the news, there's still as much as $1.4 billion, I believe, that's available. On June 30th, the Senate approved it. The president signed it into legislation on July the 4th. And less than 4 hours before the Paycheck Protection Program was scheduled to close, at that particular time, there was $130 billion still available. So as it's our understanding that as of today, there is still money available. And there's still banks out there that are doing business and working these loans. We're going to talk about that a little bit later on in the program. And once again, you can apply for these. The current date is August the 8th is the deadline. Next slide. Just to give you an idea of where has the money gone for these PPP programs, you probably see various and sundry reports on the news that big businesses are taking it and these people aren't getting it. It's not going to the right people. Rest assured, it's our understanding through the SBA that every step has been taken, as I mentioned earlier, to try to get the PPP loan money into the hands of smaller business people. And as you can see, the overall average loan size on this slide is $108,000. You can see that 63.3% is of the loan amount is under $50,000. So the over 2/3 of the loans are going to businesses that only need less than $50,000, which I think we should consider to be a pretty good success. And I think as the program goes through the August the 8th, those percentages for loans under $50,000 and probably even under $108,000 are going to continue to get smaller. So the smaller businesses that really need the money and need the support, they're working very hard to get that money in that direction. And these numbers indicate that that's exactly what's happening. Next slide. To give you an idea by state, if you can look very carefully, you can see state by state where the money has gone. And Florida, at $31 billion, has been a very big recipient of the PPP of the support program. The four largest states being California, Florida, and Texas. It looks like there's three, and New York. There's New York down on the bottom down there. So you can see that of the four largest states, while Florida is at 31 billion, New York, very big state, at 38, Texas at 40, and California, of course, being the biggest state, is 67. So Florida is certainly getting its fair share of the money, and with more information getting out of the public, we're hopeful that Florida is going to get even more. Next slide. Okay. Payroll Protection Program. I'm now going to turn the meeting over to Barry, and Barry's going to talk about the Flexibility Act as it was. And
then you're going to turn it over to Jerry. She's going to do the next slide.
Excuse me. I'm sorry, Jerry. And Jerry's going to go through the next couple slides, and then Barry will be wrapping up. So thank you very much, and I'll turn it over to Jerry.
Okay, thanks, Tom. I just want to say hello and thank your SCORE chapter for inviting me to be a guest presenter today. I am not a SCORE mentor, so I'm not here officially representing SCORE in any way. NAV, where I work, is a SCORE Foundation sponsor, though, and I'll just give them a quick a shout out here. I was at the National Office of SCORE last year, and the head of SCORE, when he heard I was from Sarasota, said, "You are in one of the best chapters in the country," and it is. Your chapter is well recognized. So make sure you're taking advantage of the resources that you have, available here. I'll also reiterate the disclaimer. I'm not an accountant. I'm not an attorney, and I'm in many ways like many of you. I've been studying the CARES Act, PPP, and EIDL in order to write about it, in order to educate and inform business owners about it. And just so I want to give you a quick landscape so you understand why sometimes you ask a question and it can be difficult to get a specific answer. So the CARES Act was passed on March 27th, signed by the president on March 27th. And then after that, there were a lot of questions. How do we actually implement this law? So Treasury and the SBA came out with guidance, and they published that in the form of what are called interim final rules. So you'll see this guidance that answers specific questions about how the CARES Act is supposed to be administered. And it's come out slowly. I would say self-employed individuals, for example, didn't get much guidance about how much they could qualify for until the first round almost closed. So it's been a process over time. There are over 21 of these interim final rules. So there's a lot of information that comes out in bits and pieces. And then on June 5th, the president signed the Ppp Flexibility Act. And so the Flexibility Act is designed to make it easier for many businesses to achieve full forgiveness of their PPP loan. So the goal for most businesses is for this to be like a grant, right? It's a loan you get, but you get it forgiven before you even make a payment, and then it's done with, and then you're fine. You keep your records, as you'll find out when Barry talks about the application process. But that's the overall process. And so guidance continues to come out. So sometimes there are just areas where it's not particularly clear, so you have to go on the guidance that we have today. So I just want to give you that quick overview. So let's go to the next slide. All right, so one of the major changes with the Ppp Flexibility Act was that borrowers only have to spend 60% of their PPP funds on payroll and still may get full forgiveness. There's still some caveats that we'll talk about, but you may get full forgiveness by only spending 60%. Now, the CARES Act did not say you had to spend any specific percentage on payroll, but the Treasury and SBA came out with that guidance of 75% previously. And then the Flexibility Act codified the notion that 60% need to be spent on payroll. So I just want to quick remind you what payroll means. So payroll means salaries, wages, commissions, bonus, up to $100,000 annually per employee, including yourself, prorated up to $100,000, including yourself as the owner employee of the business. It can include certain benefits like medical insurance and certain types of leave and state and local taxes. So for independent contractors, it's primarily going to be wages, commissions, and your net earnings from self-employment. So it's a little bit different for those. But just keep in mind that, the payroll is what they're really trying to aim this program at. They're trying to help businesses keep people on the payroll. And if you are working in your business, that can include you as well. Next slide. Now, non-payroll expenses can be up to 40% of your PPP loan if you want it fully forgiven, with the caveats I'm going to explain about hiring, restrictions, or keeping employees on payroll. But up to 40% may be used for non-payroll expenses and still get full forgiveness. And those payroll expenses include mortgage interest, not prepaid, and utilities, which includes gas, water, telephone, transportation, and internet access, as long as those were in place by February 15th of this year. And then rent. So one of the things that we found with the first interpretation of the CARES Act, or the first administration with the 25% for non-payroll expenses, where there were a lot of businesses that said, you know what, I got to pay my rent and this isn't enough. So they made the Flexibility Act gave some more leeway there for businesses to spend money on these other payroll expenses and still potentially qualify for full forgiveness. Next. All right, so self-employed borrowers. So if you are an independent contractor, you're self-employed, you file your business income and expenses on what's called a Schedule C with your 1040, then when you applied for PPP, unless you applied at the really early when it wasn't clear, you applied for basically 2.5 times your average monthly net profit on line 31 of your Schedule C for 2019. So before the PPP Flexibility Act, the guidance had said that you, this self-employed individual, owner, employee, could qualify for your own compensation forgiveness for a maximum of $15,385. That's based, if you got the maximum based on $100,000 annual compensation. So don't get too hung up on the numbers here, because the numbers are all in the application and the forgiveness application, and Barry's going to go over some of that. But what I want to point out is originally if you were, for example, a home-based independent contractor without a lot of other expenses in the form of, rent that you declare on your business taxes, or utilities or mortgage interest that would go on to your, Schedule C, then you may have found it difficult to get full forgiveness because of the formula. Now with the new formula and the new 24-week period, you should be able to get full forgiveness for your owner's compensation based on, the new compensation model. So if you had $100,000 salary, the max you would have gotten that under the PPP application would have been $20,833. Now you can apply for forgiveness for the full thing. So that's the good news. So just the overall good news is for self-employed, you have a better chance at getting it fully forgiven just based on your owner's compensation. Here's the thing that we don't know, and I've gotten a lot of questions about, and that is how that ties into unemployment compensation. So there's just a line in the guidance that says, be aware that PPP funds can affect, unemployment. And many self-employed individuals have been able to access pandemic unemployment, which has given them, the Florida unemployment, I think it's maximum $285 weekly plus the $600 a week, which actually is ending this coming week. And so they have, they've been hesitant about how to match PPP to that. And I don't have the clear answer. From what I've seen most experts say is they seem to believe that it's okay to collect unemployment before you use your PPP to pay yourself, and then afterwards. I don't have the answer as to how the 24 weeks might change that. So I'm just going to throw that out there because I've gotten lots and lots of questions on that. Next slide. All right, so the coverage period. So when you get to the application and the forgiveness application, and I have spent many, many hours with these documents, and I will tell you, it feels very overwhelming at first. I am not an accountant. I don't come from an accounting background at all. So what I will tell you is, if you spend some time with it, you can get through it. It makes sense. You may want to get an advisor to help you. There's nothing wrong with that. And the way I look at it is, let's say you're getting that average loan amount that Tom mentioned of $108,000. What would you do to keep a $108,000 client happy? This is money you're getting. If you get it forgiven, it's free. You don't have to pay taxes on the forgiven debt like normally you would on forgiven debt. So what would you do? And, if that means hiring an accountant or a financial advisor to help you walk through the application, I think that's a perfectly reasonable way to spend some of your money to make sure that you do it in the right time. But let's just quick talk about the period. So you have, after you get the loan, the time to spend the money is when you get the funds in your account. So your PPP lender, wherever you got it, from your bank or an online lender, deposits the money in your bank account. That's the disbursement date, and that starts the covered period. So previously, before the Flexibility Act, it was 8 weeks. So the money hits your bank account, you have 8 weeks to spend it properly, apply for forgiveness, get it forgiven. After the law was changed on June 5th, now borrowers who got their loan approved before June 5th by the SBA could either use the 8 weeks or they could choose the new 24-week period. For those who got an SBA approval number after June 5th, it's the 24-week period. So you have a longer period of time to spend the money. And a lot of business owners, that was a criticism the first time around, where they said, hey, it's not giving me enough time to spend this money. People can't go back to work or whatever it may be. So it gives you more flexibility. But it also is a little bit confusing, to be honest, because you got your PPP loan based on basically about 10 weeks of payroll. It's, 2.5 times average monthly payroll. It's about 10 weeks worth, and now you have 24 weeks to spend it. So we'll address that in just a moment, how we, based on the current guidance, we think that will work for most borrowers. All right, and I want to make one more comment. You're going to see a link in the later slide to an article by Tony Nitti. Tony is a CPA, and I think he's an attorney too. He's been one of my heroes on Forbes because he's really, really dug into this legislation and written in very great detail about it. And he made a comment on this particular issue, and he said, because of the 24 weeks, even if you are subject to a reduction in the forgivable amount, which we're going to talk about, if you lay people off, if you reduce salaries, even if that happens, the math is such, he says, that after the reduction, the forgivable costs will often exceed the amount you got. So even if it's a longer time period, it increases the likelihood that you will have a forgivable loan if you spend it in the right ways. All right, next slide. All right, so the advantage of using your 8-week coverage period, we'll go over these real quickly. You can look at these at the slide later, but basically, if you were in the first round, you may have already been ready to apply for forgiveness because the 8 weeks, expired a while ago. The 24 weeks is required, again, if you got an SBA approval number after June 5th. So the 8 weeks is a shorter time period. You might want to just get this loan off your books so you don't have to worry about it. If you look into other financing options where this loan may jeopardize your ability to gather financing, it may be better just to get it taken care of. So that may be an advantage of the 8-week period if you still have that choice. Next slide. Many borrowers will use the 24-week covered period. And again, that gives you more time and it may give you more flexibility to spend the money and still get full forgiveness, and also gives you some more time to get with your advisors. So if you're having trouble, if you sat down with the application, you've tried to work through it and you've gotten confused or had questions, this gives you more time to get some answers to those questions. Next slide. All right, so even if you spend 60% on payroll and 40% on non-payroll qualified expenses, that doesn't mean you automatically get full forgiveness. If you are self-employed, you'll probably be fine because you're just paying yourself. But if you have employees, then you have to look at two things, whether you've reduced hours or whether you've reduced salaries. And you'll see this on the application that Barry shows you. There's actually a worksheet, and it's the very first thing you should, it's not on the first page of the application, but it's the first thing you should do is the worksheet, because you're going to look at your full-time equivalent employee hours in the first part of the year and compare them to the covered period. So the full-time equivalent is not full-time. A full-time is the equivalent of a full-time. So you're either going to calculate that by taking the average number of hours worked and then dividing them by 40 and then rounding up to the nearest 10th, or there's a simplified method and full-time employees get 1 and less than full-time get 0.5. So you can do the calculation both ways, and it may be beneficial for you to do it both ways or to talk to your advisor about doing it both ways to see which is more favorable. But then if you reduce hours or pay by a certain amount, then you can reduce the amount of forgiveness. You don't eliminate it, but you can reduce, you may have to reduce how much you have forgiven. So after the first round, there were a lot of employers who said, I can't bring back employees. My employees may not want to come back because they're making more on unemployment, or they're scared to go to work because of COVID, or whatever the reason may be. So they built into the Ppp Flexibility Act these safe harbors. So these safe harbors make it possible that you don't bring back that employee or you don't replace that employee, but you still don't have to reduce your forgiveness because you didn't bring them back, because they meet these requirements. So I'll let you look at those in more detail. Again, they are in the on the application and the instructions as well, so you'll see that there. But just keep in mind that you want to review this if you're making hiring or rehiring decisions. You want to review this before you do that, or talk to your advisors before you do that, because that could have implications for forgiveness down the line. So it's just helpful to make sure you're aware of this. Next slide. All right, so I mentioned that there is this, safe harbor, and the safe harbor extends to December 31st, 2020. Prior to this, it was June 30th June 30th of 2020. So there is an extension of that time. And so you may not have to reduce your forgiveness if you can restore employees. And just to be clear, it's my understanding from what I have read that that it will be based on the date you apply for forgiveness or December 31st, whichever comes first. So that doesn't mean that you wait till December 31st to bring people back. If you're going to apply for forgiveness, in October, for example, then the date you apply for forgiveness would be the date that you would use for the FTE reduction. Next slide. All right, so I guess the next slide goes into more detail about these changes, and just understand, again, these periods that are going to be important. So when you're looking at the application or the instructions, it's going to talk about the covered period, and then it's going to talk about an alternative covered period, and also the safe harbor rules, and those are all spelled out in there. All right, next slide. All right, so tracking payroll expenses incurred or when paid. So another issue that came up before the Flexibility Act was passed was that the date you get your PPP loan may have nothing to do with the date you pay payroll. So you get approved, and then the money shows up in your bank account, and that may be in the middle of a payroll cycle. It may be at the beginning, it may be at the end. So there is this these instructions that talk about payroll costs paid and incurred during the covered period or the alternative covered period. So the covered period the covered period starts the date the money gets deposited in your account. So the date your lender puts the money in your account is the covered period for the 8 weeks or the 24 weeks. But they also created this alternative covered period, which starts with the next pay period, so that it can coincide with alternative payroll periods that employers have, because they don't match up perfectly with the payroll cycle that the employer has. Next slide. Non-payroll costs have to be tied to the covered period, but you can still pay them at the next billing date. So if the billing date falls after the covered period, you can still make that payment afterward. So that's your, utility payments, for example, that again may not match up exactly with your with the time you got the PPP loan. So I know this is a lot of details, but you want to be aware of it so you can be keeping track, because documentation is going to be key, as Barry is going to point out, and keeping track of those bills, making sure that you have record keeping for it, and then paying them promptly is going to help you stick within the guidelines and hopefully achieve full forgiveness. Next slide. So I mentioned earlier that there are a couple things that could reduce the amount of forgiveness, even if you spend 60% on payroll and 40% on qualified non-payroll expenses. And one of those is if you reduce wages. Now, for employees who make more than 100,000, you're fine here. But for employees who make under $100,000, reducing their wages by more than 25% can result in a decreased PPP loan forgiveness amount. So you're basically reducing how much you get forgiven. Now, if it's not forgiven, remember, it turns into a 1% loan for either 2 or 5 years. So you're trying to maximize it, but there are times where it may not make sense. And so you may either qualify for one of the safe harbors, or you may just need to be aware that by reducing your employee wages, you may also reduce the amount that you can actually have forgiven. And you're going to, on the application, they walk you through it. You're going to compare the look back period to the covered period, and it's a lot of math and calculations, but you're going to compare those two, and then it will walk you through a worksheet that helps you do the math so you can see how much you have to reduce it by. All right, next slide. Another positive change, so the CARES Act included a payroll tax deferral for all employers where you can defer the employer's part of Social Security payroll taxes, that 6.2%, and pay them later. So you do have to pay them, but you can pay them in the future rather than having to pay them now when you may be trying to preserve cash. Now, this also applies to the self-employed. So if you are self-employed, you're paying the full Social Security payroll taxes because you don't have an employer who's paying half. And so you can defer 50% of those costs to the future. Before, once you got your PPP loan, then you couldn't take the deferral. Now that's eliminated. So this is still an option for your business to save some money in terms of cash flow and pay those payroll taxes later if you determine that's advantageous. And again, this is something I would definitely talk to your accountant about. All right, and next slide. All right, and the last slide I'm going to cover, and then I will stick around to help with the Q&A section, is how long you have to pay this back and how much you pay. So the interest rate is 1%. And that's true whether you got your PPP loan at the very beginning or whether you just get it in the future. Right now it's 1% fixed interest rate. If you received your loan before June 5th, then you received it under the previous, under the CARES Act, well, actually the CARES Act had a 10-year repayment period. The guidance had a 2-year repayment period. So the Flexibility Act put in a 5-year repayment. So it basically split the difference between that 10 years and 2 years. So now you have a 5-year repayment, and lenders may extend a 5-year repayment for loans where there is still a balance that needs to be repaid if you got your loan before June 5th. So check with your lender and see if you got a sizable loan and you need more time to pay it, check with your lender and see whether that may be a possibility for you. All right, let's go on. Barry is going to now cover the 2 PPP loan forgiveness applications and the process that borrowers will use to apply for forgiveness.
Hi, thanks, Jerry. You did a great job. It's really confusing, but your explanation made it a lot clearer. My role this afternoon is to provide you, I'm going to turn that off, is to provide you with a simple, easy to understand way of figuring this out. Whoops, this is not the right slide. Next slide, please. Thanks. Let's start this way. As Jerry mentioned, there are really straightforward, easy forms and instructions now. These links will take you to both the standard full-size loan forgiveness application as well as the easy version. My suggestion is that you go to these links and print out the instructions and the application. Next slide, please. This easy application form really is that it is pretty straightforward for many borrowers to use. And we're going to talk a little bit first about how this works. Next slide. The easy application has only 5 pieces of information and requires you to do a few calculations. You might seem that seems out of context given what you used to know about the forgiveness, but this is a form that is used, but it's only going to be available to certain kinds of borrowers. Next slide. There are 3 categories of business types that can use this easy form. The first is businesses that are self-employed and have no employees. So as Jerry was mentioning, if you're an independent contractor, you're on your own, you don't have anybody else working for you, you can use this form. Or you're a business that you didn't reduce employee compensation by more than 25%, and you didn't reduce the number of hours or employees. So if you fell into that category, you can also use the easy form. And lastly, businesses that had reduced sales that were caused by the pandemic and didn't reduce their employee compensation by more than 25%. So what they try to do, at least as my understanding, is that when they came up with this form, they wanted to broaden the funnel so more and more smaller businesses can use the form. Next slide, please. The criteria, again, and if it seems like we're going over it again, it's important that you understand it. To use the easy form, you must use the money for payroll, rent, mortgage, and utilities. There was already a question asked about whether you could use the money for building insurance. The answer is no, you may not, at least according to the definitions. Another criteria is that your payroll had to be 60% of the loan. If you use the money where 60% was for rent and other factors, you may not use the easy form loan. Additionally, as Jerry just mentioned, if you choose the 24-week coverage period and you use the $20,000 compensation for an owner employee, you can use it. And if you use it for the 8-week period, you could also use this form. Next slide, please. The nice thing about providing information is that Jerry wrote an extraordinarily easy to understand article about how this works step by step, inch by inch, and she did a great job. So my recommendation is if you go to the link on this page and read the information about how to fill out the short form, easy form application, we think you'll understand it. Next. Now, this image is meant to show the standard full service standard application. So if your company is a C Corp or an S Corp and does not qualify to use the easy form, you will use this form. It's similar to the one that they first came out with. The difference now is that the application and the instructions are on two separate documents, but it's basically the same. Next slide, please. Earlier, when Jerry mentioned Tony Nitty, we had used his article many times with our clients. When someone has the full service standard form forgiveness application, I recommend they go to read Mr. Nitty's form. The different worksheets from worksheet A and taking the information and moving it to another part of the application is written so well that we believe that you can understand how to fill out the application. Next slide, please. In addition to Mr. Nitty's article in Forbes, I recommend two wonderful YouTube videos, one for the short form and one for the standard form. They're presented by Jamie Troll. She is an accountant in Tennessee, and she does an exceptionally great job in taking you through the forgiveness applications. I found myself starting and stopping. I had a copy of the application in front of me. I would back up. And so for those of you that want to understand how to fill out the application, Jamie's YouTube videos are just great. Next, please. Now, some people learn using different methods and tools. For those of you that might use the Hesiod method, that means have someone else figure it out for you. You might want to read this article by Alan Gassman. This is an in-detail article that will walk you through the application as well, but this would be for those of you who feel that you need to know every little detail about the application process. Next slide. So while we've gone through the different forms of application, I also want to recommend an SBA webinar. It happened in June of last month, about 3 weeks ago. It covers all of the issues that are very basic, and they do a great job. They have a Q&A session, and you may be able to pick up information from that. So the link to that webinar is shown at the bottom of the slide. Okay, let's go on. So we've talked about the application. We've given you, we hope, the kind of resources that you can use to read about the application, to watch the video, to look at PowerPoints. All those tools are there for your use. What I'd like to do now is talk about the process of what's going to happen once you file your forgiveness application. So, and Janae, you can slow down just a hair. Thank you. The first slide about the process says, wait, don't submit your application yet. So all through this webinar, we talk about what the application is. Jerry did a great job talking about the terms of the application and the regulations. And now what we're saying is, wait a second. The lenders do not yet have their directions from the SBA about how to process forgiveness applications. We don't know exactly when those instructions will be coming out. Some people believe that it should be in the next few weeks, but you can't do anything with your lender until you get notified that they're willing and able to accept your application. The third bullet here is also important. I've been on a number of websites and believe that some of the larger banks and the fintech companies are actually going to use their own electronic version of a forgiveness application. So while we're giving you the forms and the instructions and the YouTube videos and all sorts of things, we believe that when it comes time to filing the applications with some of the larger banks and fintech companies, they will have you go online and use their own form. The time to contact your lender about when they are going to expect to start accepting forgiveness applications is now. There's no rush to start filling out the application. And we'll go through some of the more details in that in just a moment. Next slide, please. Now, you can, once that the lenders are ready to accept your forgiveness, you can apply for forgiveness as soon as you spent all the money. So if you had an 8-week coverage period you chose, or if you chose a 24-week coverage period and spent the money in 10 weeks, you can apply for forgiveness now. But the key is you have to know when the lenders are going to be ready to take the applications. Next, please. So is there a rule anywhere that says when you must file for forgiveness? There is not. There's no definition. However, there is some legislation that says you have to apply for forgiveness within 10 months of your covered period. Not when you got the money, but when your covered period ended. So that essentially gives you a 10-month window once you get your coverage period completed. However, we've talked to a couple of the banks and a few of the fintech companies who have said that they have specific time restrictions about when borrowers can apply for forgiveness. Again, we recommend that you contact your lender to find out what their rules are about when you can apply for forgiveness. Next, please. Excuse me. The This is a slide that basically says that depending on when your coverage period was over, so if you had a shorter 8-week period and you've got an early loan, you could apply this summer. On the other hand, the second paragraph says, well, if you waited until June and got a 24-week coverage and waited until the end of December, you wouldn't have to pay the loan or apply for forgiveness, until 10 months after that would take you until the fall of next year. So the message here is there's a wide range of time. There's a lot of details that's going to come out. There may be some future legislation that may change some of this, but don't feel obligated that you have to fill out your forgiveness application right away. Next, please. This happens to be an important element for most borrowers. Both at the federal level and at the state of Florida level, borrowers will not have to pay federal taxes or state taxes on the money that you received for your PPP loan. I came across this a couple of weeks ago. I included the link to the source that I used. And in the case of Florida, there was Governor DeSantis issued an executive order, and a link to that is there. So again, the bottom line is the following. If you have a PP loan, you won't have to pay federal taxes on the loan or on the state or any state taxes. However, next slide, please. You will not get a tax deduction on the money you spend on the expenses you use for the loan. So if you had a loan and you had payroll taxes and mortgage and rent and utilities, the loan can pay for that and you're not going to be taxed on it, but you cannot double dip. You can't get the forgiveness for those expenses and then turn around and try to get the taxes deducted from your federal taxes. Now, if you get a partial loan forgiveness, you can have a partial tax deduction. My instructions and suggestion is talk to your accountant. Your accountant has to be the one to lay this out for you. Don't depend on this slide. Talk with your accountant. Next slide, please. Now, I want to spend a few minutes on what will happen once you submit your application for loan forgiveness. Presuming that your application is correct and that you provide all the documentation required, your lender, whether it's the bank or fintech, they have 60 days to process the application and then send it to the SBA. It is your bank that makes the initial go, no-go decision on forgiveness. They send it to the SBA and the SBA makes the final decision. Next slide, please. What to expect from the SBA? Once the lender sends the application to the SBA has 90 days to either approve or reject the application. If the application is approved, the SBA notifies the lender, who in turn notifies the borrower. Hooray, we're all set. However, if the SBA determines that the loan is not eligible for forgiveness, either in part or in whole, they will notify the lender, who will then notify the borrower. At this time, there is no definitive information about how the SBA will go about making these decisions. Earlier, Jerry mentioned something called the interim final rules, or IFRs. We're waiting for the next set of IFRs to see what the SBA is going to say to the lenders about how they should go about approving or rejecting the loans. Next slide, please. Now, I want to leave this slide up for a minute so you all have a chance to read it. I'm not going to go through all of it. But what it says is, if the loan is not forgiven by the SBA, either in part or in whole, the loan will have to be repaid before the maturity date of the loan. That was, again, 2 years or 5 years, depending on when your coverage period choice was. It will be up to the lender and the borrower to finalize all the loan repayment terms. The the SBA's decision to reject a loan is not final. It is not final. Borrowers may appeal the SBA decision. I've hunted up and down and backwards to try to find out more about it, but the only thing I found is that last sentence. The SBA plans to issue a separate interim final rule addressing the appeals process. So stepping back for a moment, when you are ready to submit your application, whenever that period is, step one is you submit it to the lender. They have 2 months, 60 days to review it and pass it on to the SBA. The SBA then has 3 months to look it over and decide whether to forgive it in whole or in part. That's 5 months of not knowing what's going to happen. Hopefully you will be notified earlier than that, but it may take as long as that. Next slide. I'm not going to read this slide, but this is something for all of you to have as a checklist. This is the information you will need, documentation, to provide to your lender so that you have a higher probability that your loan will be 100% approved. Save this slide, print out this slide, keep it near you when it's time to submit your application. Next slide, please. You have to keep all your paperwork for 6 years. There's no easy way of saying it other than that. Whether your loan is paid in full or not, you have to keep your documentation for six years. Both the SBA and the IRS have an opportunity to come back and audit your loan, so it's important that you keep your paperwork for that period of time. Next slide. I put up this slide in earlier webinars. I want to put it up one more time. The rules say that for PPP loans, the lenders may sell the paperwork to another lender. They did this during the crisis in 08 and 09 when mortgage paperwork was sold. So our recommendation is stay in touch with your lender. Confirm they're still the bank or the fintech company that will be processing your forgiveness loan. And if not, find out who is and contact that organization as soon as possible. And with that slide, go to the next slide, please. And with that, Janae, I'm going to turn the program back to you.
Thank you, Barry. Before we start the Q&A session, I just want to first mention a couple of things. We sent out the slides earlier today, but there seemed to be an error. And so after this presentation is over, I will send out the updated slides as well as a link to our website where you will be able to find the recorded presentation. It should be up by the end of the day tomorrow. We will start the Q&A with the questions we received via email before the presentation started, and then we will go through the questions you submitted during the presentation. Are you ready for the Q&A?
Ready as we're ever going to be.
Okay. So the first question we have is, I did not apply for the PPP loan, but I did apply for and received the EIDL loan. Would the loan forgiveness for the PPP also apply to the EIDL loan?
No. the forgiveness we refer to is only for the PPP loan. If you have an idle loan and you were one of the lucky people that had that advance, it ranged from $1,000 to $10,000, and you were to get a PPP loan, the amount of the idle advance would be deducted from the PPP loan forgiveness, but the idle loan itself has no forgiveness element to it. Jerry, is that okay?
100%. And that's a very common question. A lot of confusion.
Good.
Okay, next question. If there's no rent or mortgage as buildings are owned, can buildings, insurance, and property taxes be included instead? So that's
Jerry, what about you?
No, Barry, you answered this earlier. No, it's pretty specific. It's rent, mortgage interest, and utilities, and those don't fall under the utility category. So,
And don't shoot the messenger, please.
all right. Do you have to have everyone back off unemployment by the 24th week?
I read that question. I didn't understand it.
I think I understand the question. So, if you want full forgiveness, and it depends on either the earlier of the date you apply for forgiveness or December 31st of 2020. If you're looking at the application, I actually looked at the application when I was reading your question, you're going to fill out the safe harbor, and it's going to say you're going to enter the FTEs for your employees between February 15th and April 26th, and then you're going to calculate them for the date you apply for forgiveness. So if you want full forgiveness, your employee FTEs shouldn't be reduced by more than, that's 25% is the salary, right? So it shouldn't be reduced by the date you apply for forgiveness or December 31st, 2020. So whichever is sooner. So it depends on when you get your PPP loan and when you spend it. But, if you can't bring everybody back, you may meet a safe harbor requirement. Like, for example, an employee refuses to come back and you've tried to rehire for that position. That would be, an exemption. Or you may just decide that it makes more sense to turn part of this into a 1% loan. So that's another option as well. So you just go, I recommend exactly what Barry suggested, that even if you're not ready for forgiveness yet, print out the application, print out the instructions, and start walking through it so you can kind of understand what they're getting at here, and it can help you as you think about these decisions, because many of you are sort of in the midst of making decisions about what to do with your business.
And Jerry, one more thing. Most of the SCORE mentors in our chapter are well-versed in the applications. We're not quote unquote expert, but we've dealt with the same questions. So by having the application in front of you and speaking with your SCORE mentor, the chances of getting a more understandable answer are much higher.
Agree. And it's free.
Right?
All right, for the next question, this person asks, for owner employees of an S Corp, can you add shareholder distributions to the payroll calculations for a new PPP loan request?
I don't know what a new loan, you mean a second one? If that's the question, would you read the question again, please?
Yes, of course. For owner employees of an S Corp, can you add shareholder distributions to the payroll calculations for a new PPP loan request?
Can I take this one?
Please.
All right. So my understanding is no. I wrote an article about owner's draw because we got a lot of questions about this. And I have, if you are truly an S Corp, taxed as an S Corp, so you pay yourself a salary, and then on top of that, you may take owner distributions. Now, many business owners, in order to minimize the taxes that they pay themselves a very small or sometimes non-existent salary, which the IRS does not approve of. And then they take a lot of money out in owner's distributions. So the owner distributions aren't covered by payroll tax. So this is a situation, unfortunately, where because you've saved money on payroll tax, you're going to not get money on PPP because they're looking for the money that is payroll, that is taxed. So I would definitely suggest you check this further and investigate further. I also did see an email from the SBA to a small business advisor that said, no, you may not include owner distributions. But I never saw that specifically stated as that, in that language on any of the guidance. It's just when they talk about how you apply for forgiveness, they're talking about the owner's compensation as in the form of salary, the money that you pay payroll taxes on. So that's my understanding is no.
It was mine as well, because the tax attorney in Clearwater, Gassman, had that as one of the topics of his webinar. He confirmed that, so
okay.
We must be right. Go ahead, Jim.
Okay, so this person wanted clarification that an S Corp cannot use the easy form, correct?
No, that's not true.
Okay.
There's three criteria on that, and it's self-employed is one of them, but there's two other criteria. Yeah.
Go back to that. You can't go back to the slide, but the answer is yes, you can, as long as you did not reduce your employee's compensation by greater than 25%. And you have the same number of hours that you had.
Okay, and next question. I heard that a disaster loan can affect PPP forgiveness. Do you have any input on this issue?
I think that one goes back to the EIDL program. If you were one of the earlier recipients of the EIDL program and you received the advance, that advance would reduce your forgivable amount in the event that you participated in both the EIDL and the PPP. That your forgivable amount is reduced by the amount of your grant on the EIDL piece. So that's where that would come into play.
Yeah, and very early on, I think it was if you got an EIDL loan and used it for payroll before April 26th or something like that, then you refinanced it with a PPP. But honestly, at that point, I didn't know too many people had gotten an EIDL loan. It was still they were still in the queue. So I don't think there are too many borrowers who would have fallen under that criteria where they would have refinanced their EIDL loan through a PPP. I think that's minimal.
All right, this person asks, do you believe that it is still in discussion that loans under a certain amount may automatically be forgiven?
Tom,
Yes.
if you want to.
The answer to that, which, for the sake of this program, we did not want to introduce too much information about what is being considered. As I mentioned earlier, we're talking about the rules as we understand them now. However, those are being considered, and as Barry mentioned numerous times, take your time and think about timing of when you want to put in your application, because these rules are changing all of the time. And as we understand it, as of the news, as of 6 o'clock before I came in, that is one of the things that is being considered. But do not take that to the bank. Do not consider it as solid information, because as you know, politics and all sorts of things just don't mix. So what we're telling you is what we know today, and I would stick with the rules, but be patient as Barry has explained, be patient in your application process if you can.
Well, and I just add to that, if that's really important to you, then you contact your elected officials in Washington and let them know, and same thing,
Right.
If there's problems with the program that you're experiencing and there doesn't seem to be clear guidance. One of our senators, Marco Rubio, heads the Small Business Committee. And so they do have, this was my first job in college, was answering constituent questions and helping them with problems with federal agencies and federal programs. And so they have staff whose job is to do that. And they may not be able to solve every problem for you, but they need to hear from you as small business owners, because the next whatever is coming, and they need to hear, what challenges you're experiencing and what you need from them. So don't be afraid to make that phone call or fill out that form online.
Good advice, Jerry.
All right, so this next question is slightly longer. If you want to pull it up in the Q&A, it might help if you read along maybe. All right, so I have exhausted my funds. My business partner and I, we own the business 50-50, are owner-operators and the only employees in the business. We use a simple cash in, cash out accounting system, and we do it ourselves. Due to the lack of guidance when we got our funds, May 15th, we just moved all the money to a separate account and deposited money into our accounts via a transfer through our bank's app and labeled it PPP Payroll for this person's name. And then we use some for rent. That's it. Will my bank statements, as well as checks going out for rent, be enough documentation for showing our funds went to forgivable expenses?
One thought I have, and some Barry and Jerry may have some others. In addition to the records that you have from your bank, you may wish to ask those whom you pay the monies to for receipts. A receipt from a recipient who receives payment for any goods or services would certainly add additional credence to your documentation. Any other ideas, Barry, Jerry?
Yeah, I think this addresses an issue that I've gotten a lot of questions on, which is how do I document paying myself, with PPP funds if I'm an owner, operator, self-employed? I mean, I'm a huge fan of having a separate business bank account and then, writing a check out of that business bank account to pay yourself. I think that's a good practice, regardless of PPP, but some people do transfers, et cetera. So I think just being able to document, that you are, that you're paying yourself and that you allocate it from PPP. I would keep a copy of that, again, for 6 years. But also, it sounds to me like maybe you just file a Schedule C. So you may just fall under that category of the owner compensation under Schedule C, where they're looking at basically what was on the tax return. So you may not have a problem with that. So, and rent, what do you have as documentation? Your rent, your lease agreement, and then you have a copy of the check that you wrote for rent. So you keep a copy of the canceled rent check. I'm just giving my 2 cents on this, not an official SBA opinion, but.
We a couple of us in SCORE helped process applications for a grant through the Sarasota County. And amongst the documentation they used to document the legitimacy of an expense was indeed leases, invoices for rent, and canceled checks. So in the essence of the question, if it is mostly just payroll and rent, clearly having the copies of the canceled checks, photocopies, scan them, make it electronic. Same thing with the rent invoices. And then of course the bank statements they can foot to would be I think one of the best ways of improving the probability of the loan being forgiven.
All right, next question. There seems to be no accommodations for newer businesses. As a sole proprietor in just my 2nd year of business, my sales and profits this year were going to be significantly higher than last year. Is my forgiveness strictly limited by last year's sales/profits, or is there anything that takes into account a growing business?
Let me start. First of all, congratulations on the growth of your business. I'm sorry the pandemic got in the way, but I would encourage you to keep working hard, because if you had a business that started last year, you're growing, hopefully we'll figure out a way to keep it going. The sales of the revenue of your business has nothing to do with the PPP loan forgiveness. It's only expenses. So whatever the covered period was, 8 weeks, 24 weeks, it used the definition of the average of 12 months expenses that you had last year, and you took 2.5 times that would be your loan amount. Now, what may happen is that you were gearing up for more expenses this year, and then had to back away. So maybe the essence of your question is that 2019 may not have been a good representation of your business, but you can either use that or you can use January and February of this year and then annualize it and use then 2.5 months worth. I probably made people more confused than when I started.
No, I think you touched on that well, Barry, because the calculation allows for the most recent 2.5 months up to the start of the program. So that would be the recommendation I would say for this individual. You know, whatever your largest expense period was, right up to the start of the program would be your loan amount that you'd want to seek.
Yeah, I'm trying to find it. I swear I saw this recently,
Yeah.
but because the previous guidance you applied it based on line 31 of your 2019 Schedule C, right? That was your net profit, and it was 2.5 times average monthly revenue was for the self-employed filing Schedule C. That substitutes for payroll. And I swear I saw something that that finally addressed the question for newer businesses where they could use the months of January and February of 2020 instead of 2019, but I'm not finding it quickly, so I apologize. I think that's a fairly recent development in the guidance, so if I can find it, I'll send it on to you,
Yeah,
Barry.
I think we included that in one of the previous webinars,
Okay.
if I recall, Barry.
It was in webinar number 1 where we were still kind of figuring out what was going on. But in any case, let's go on to the next question.
I actually believe that's all of them. So I just want to remind everyone that I will be sending out the PowerPoint links immediately following the presentation. And I will also send the link to the website where you can find the recorded webinar. It should be put up tomorrow.
Great, sounds great. So thank everybody for listening in. We hope we've answered your questions. I'm going to turn the program back to Tom as the chairman of the Education Committee. Tom?
One last comment. I first of all thank you, Jerry, for joining us as our guest. We really appreciate your input and all of the information you provided. I would suggest that if you have a mentor or you are communicating with anyone at SCORE, number one, please tell them if you find these webinars helpful. That's number one. Number two, the chances are pretty good. That being said, that we've already covered the material as we understand it today. I would say the chances are pretty good that there most likely will be some further adjustments to the CARES Act, PPP, and EIDL loans. Let's quite frankly assume that that's going to happen. And if that does happen, keep your eye on the news. Most likely we will probably do a follow-up webinar to this and provide you with additional follow-up information on what we understand to be future changes. So stay tuned and keep working hard on your businesses. Stay positive in these difficult times. And if you don't have a SCORE mentor, please rely on them because they're very dedicated and really helpful people. And I think you'll find that you're in the right place, and it's good to be in a small business in America. And let's hope we can help you out.
Thank you.
I have one last comment I would like to make. We have a survey that we'd really appreciate it if you took the time to fill out following the presentation. It should pop up on your browser right after you exit. If you could just take a few minutes to fill that out, we would greatly appreciate that.
Bye-bye. Thank you.